Hey guys, it is Julie here with JT.Wealth. Today we are talking about everyone's favorite Workhorse, as it has been a crazy week for them. So let's get into it. All right, welcome back guys. Happy Friday and thank you so much for being here. So like I said, today we are talking about Workhorse. Now it has been a bit of a crazy week for them as we've seen a lot of decline in their stock price. This of course is causing a little bit of panic for Workhorse investors. In our last Workhorse video, we discussed the opportunity of buying additional shares at this lower price, but still we are seeing people get very squeamish with these downturns. Some investors are jumping ship and others are just sitting a little uneasy with their investment. So in today's video, I just want to really take a moment to kind of refocus you guys, go over some of the really positive news we're seeing around Workhorse lately, and just discuss why I still think it is a really solid long-term investment. And of course, just a friendly reminder before we get into all that good stuff, please make sure that you are subscribed to the channel. Really helps us grow and we appreciate the support. And if you enjoy the video, make sure to give us a big thumbs up as well. So it has been a red week for Workhorse, starting off around those highs just shy of $31. We're now down about 22% on the week, hovering around that $24 mark right now. On the brighter side, we are seeing some recovery today. At one point, we were up 15% on the day, and right now hovering around the 10% mark. Now, of course, this stock has had an amazing run up over the last 6 months, so a bit of a pullback was to be expected. So hopefully some of you were able to take advantage of these lower sale prices and increase your position on Workhorse for the long term. On that note, let's take a look at some of the positive news that has come out in the last 2 days surrounding Workhorse and why it still has us looking towards their future. The first piece of news we are going to look at is in regards to their electric range. In Workhorse's investor presentation, they have some of the details for their next generation C series. And in this, it stated that they had a 100-mile fully electric range with that optional horsefly delivery drone. But yesterday, we got some news that this has been drastically increased, as a new article came out saying that Workhorse delivery van travels 160 miles on a single charge, and this longer range could mean a broader appeal to more customers. Workhorse CEO Dwayne Hughes said that achieving a 160-mile range has been a goal of theirs for quite some time and significantly expands their addressable market. Now, this mile range definitely has them covered as far as USPS contracts are concerned, when you consider that the average USPS mail truck only travels about 15 miles per day since it's very stop and go. But extending this range up to that 160-mile mark really helps include some of those rural markets too. In addition to this, on Thursday evening, we had another great Workhorse article come out stating that Workhorse stock is hot, hot, hot. Workhorse stock is a long-term winner with tons of fuel left in the tank, and it has absolutely been on fire in 2020, with the stock skyrocketing 825% higher this year on the back of abundant investor optimism with respect to the company's ability to disrupt the last-mile delivery market with the next-gen electric delivery van, and this optimism is not misplaced. And although Workhorse has had a huge run-up here in 2020, there is still a lot of potential upside left for Workhorse over these next few years, as that last-mile delivery niche is a huge market. So I just want to cover a few of the great points made in this article regarding the potential of Workhorse. They discuss how electrification is the future, and there is no doubt about it. The wave has arrived, and over the next decade, it will proliferate across all transportation verticals, from passenger cars to commercial trucks to last-mile delivery vans, and everything in between. Now, the first trend driving this disruption is the fact that consumer demand is shifting. And this is due to a younger generation of consumers coming up who have been raised hyper aware of the environment and how to reduce carbon emissions. A 2018 survey from HPI showed that 91% of millennials are considering buying an electric vehicle for their next car purchase. So over the next decade, this is going to really drive a shift in the auto market towards that EV focus. Secondly, the technology is getting better. This is resulting in huge advancements in EV technology, and you can't talk about EV technology without talking about Tesla, who is really focused on making smaller and better batteries that last longer, charge faster, and take up less space. And this, of course, helps lead to the cars getting cheaper. So thanks to this better technology, it's a more streamlined manufacturing process and increased scale, helping drive those prices down. And the fourth trend is that not just the demand, but the need is getting bigger for these EV vehicles. As we discussed in our video the other day, the state of California just announced that by 2035, they will no longer be able to sell new gas-powered vehicles. And of course, that is a trend that is likely going to catch on in other areas of the country and the world. Now, there are a lot of EV players out there, but not many of them are directing their efforts at that last mile delivery niche. And none of them have created a solution that is as robust as Workhorse's last mile EV delivery solution. Workhorse's C-Series electric delivery vans are already more fuel efficient than diesel trucks, with 40 miles per gallon gas equivalent versus 6 miles per gallon for a traditional UPS truck. And they're already so much cheaper, with a 65% lower operating cost per mile. Now, this article says already because diesel trucks aren't going to get more efficient or cheaper anytime soon, but Workhorse's C-Series trucks will. And this, of course, will be from the EV battery technology improving and just manufacturing processes becoming more streamlined. In just the last few years, Workhorse has increased their efficiency by 25%, reduced operating costs, increased their drive range, and reduced charging times and vehicle weight. So those are already significant improvements, and we're going to continue seeing more improvements down the road. Now, I know we are all incredibly focused on the prospect of that USPS contract, but we can't forget that outside of that contract, the last mile delivery is a huge addressable market. It represents an $18 billion annual market opportunity with over 350,000 last mile delivery vehicles purchased by US fleets annually. Given that the last mile delivery market is an oligopoly and that all of the major players will electrify sooner rather than later, it is quite likely that nearly 100% of the 350,000 delivery van market in the US is electric by 2030. If Workhorse nabs just 10% of the market at a $75,000 average price and a 15% operating margin, then by this article's modeling, they suggest net profits should round out to about $300 million by 2030. A 20 times multiple on that implies a potential future valuation of $6 billion, more than double today's market cap of $2.7 billion. But let's say that Workhorse nabs 20% of the market share, then we're talking $600 million in 2030 net profits and a future valuation of $12 billion, up more than fourfold from the Workhorse stock price today. Either way, there is still plenty of fuel in the tank. So their bottom line on Workhorse stock is that it is a long-term winner. Yes, it's come a long ways in a short time. Don't blindly chase the rally, but on the next pullback, buy the dip, because Workhorse still has tons of upside potential over the next few years as the last mile delivery market gets electrified. So there you have it, guys. I think that article really sums it up perfectly. There are still a lot of catalysts in play for Workhorse. So when you see a dip, do not panic and just remember those fundamentals of why you chose to invest in Workhorse in the first place. Now, of course, we all remain very hopeful for even a slice of the USPS contract, as that would bring a huge boost to Workhorse. Beyond that, their income that they're going to receive from Lordstown when they're fully up and running. And if you have any further questions on those two deals, make sure to check out some of my previous videos where we go much more in depth. And of course, guys, if we do not get a portion of the USPS contract for some reason, there is going to be a big sell-off. But take this time to really evaluate why you chose to invest in Workhorse and what your realistic time frame is. If they don't get the contract, it's not like this company is just going to disappear overnight. As always, please let me know your thoughts on this. How have you handled this week? Were you getting a little nervous, or did you just see this as a good buying opportunity? Please leave a comment down below. Make sure to give the video a big thumbs up and that you're subscribed to our channel as well. Thank you guys so much for watching. I hope you have an awesome weekend, and cheers.